Welcome to the Funded Podcast, where we dive into the details of how businesses really start, grow, and operate. We'll hear from experts that could guide us on our small business decisions in finance, marketing, managing people, and everything in between. I'm your host, Stephanie, the CEO of Funded, where we're on a mission to redefine how the smallest businesses understand and access capital. And today, I'm chatting with Chat, the co-founder and CEO of Baton, on buying an existing business. Baton is Zillow for small business. Let's dive in. First, welcome. And the first thing on my mind is the most basic is who should buy a business?
Yeah, that's a great question, and thanks for having me here. I think anyone can buy a small business. I think the biggest issue is most people don't realize that it's a good opportunity for them and something that they can do versus starting a business from scratch, working in a larger company or working for someone else. And I think a lot of what we spend time on is really education to give people a good sense of what are the steps to buy a business.
Awesome. Cool. So anyone could consider buying an existing business. And before we kind of dive into buying a business, why might this be a better route than starting a business from scratch?
Yeah, I think a lot of it is because a business that's going has already essentially addressed a couple of key things, right? They either have a bunch of customers that love them, they have carved out a location or a geographic concern, right? If they're a contractor or whatever it is, or a landscaper. And I think at the end of the day, you want to reduce uncertainty in any new venture. And an existing business has done that, especially if they've been around for 15, 20, 30 years. You want to almost be the honorable successor for that business, right? And how you can take it to the next level.
That's such a good response too. And I just love this topic. I'm so excited to have you on the show today because when I started my first business out of college, I didn't even consider buying an existing one. And I think like a lot of people, I just assumed I couldn't afford it. I know so much more now that actually because it's an established business, I might actually be able to afford it more than being able to afford starting one. And that some of these businesses are SBA pre-approved, which means they're lendable and not to mention the cash flow, right? As a first-time entrepreneur, a lot of people don't think about the fact that if you buy an existing business, you literally can know if it's going to be profitable in its very first month, which sounds a lot less stressful than I might go start something. So big fan of buying an existing business over starting one. Okay. If someone is interested in buying a business, what is the first step they should take?
Yeah, I think at the end of the day, it's what do you want to buy? It sounds like a very simple answer, but it actually matters a lot. I think, you've done this as you've started businesses. It has to be something you're passionate about. It has to be something that you're going to wake up every morning and want to be in it on the good days and the bad days. So I actually think that's an important piece. Some of it is the industry and the type of business, the location constraints, but at the end of the day, it's really something that you want to do. I always tell people when they're doing tech startups, is this something you want to do for the next 10 years? And I think buying an established business is the same thing. What is going to get you excited about it? And then once you really hone in on that and look at different businesses, kind of research them, I think then you can start to go into some of the next steps of, what are the financing paths? Should I line up investors for this? How big of a business do I feel comfortable buying, etc.?
Awesome. That's so interesting. And one thing I never thought of when I bought a business way back when is I kind of felt like when I hear that, you have to be excited about it and passionate about it. I always thought it has to align with almost my hobbies. But what I realized is also being passionate about the business could have little to do with the business and more to do with, do you like managing people? Do you like leading? Do you like making decisions? And it's Well, if all those things are true, a bigger, more established business might be more interesting to you than a company with like three people where you're likely going to be doing the work of the business. So
Yeah.
it's like, are you passionate about like, are you a baker that wants to actually be in the kitchen? Buy something really small.
Yeah.
Have you been a baker your whole life and you're a great manager as a result? Maybe buy something bigger.
Yep.
Okay. So when it comes to financing the purchase of an existing business, I'm also curious about first steps and options. The first thing on my mind wondering is, we said you're the Zillow of small business. Is it the same? Like, can I go get pre-approved or what do I do?
Yeah, that's a great question. I think there are a lot of parallels, but one of the unique pieces with getting pre-approved is a lot of SBA lenders are actually interested in knowing the exact business that you want to purchase. So a plumber buying a plumbing business is different than a tech salesperson buying a plumbing business. Not to say that both couldn't get approved, but the lender actually looks at that differently. And so I think part of it is ensuring that you have your almost financial house in order. So when you're ready, you can move quickly. You can get the equivalent of pre-approved sometimes, and you should establish a relationship with a lender so that they can start to do some of the work and you look like a more serious buyer. But really, at the end of the day, right, there's a ton of financing options. If they're the SBA 7A loan, you can line up investors, you can roll over a 401k, you can do a bunch of different things. But the more that you understand about it, the more that when you identify a company that you want to buy, you're really able to move quickly. But it's not required to get pre-approved because most lenders, honestly, they'll give you like a letter saying, hey, we would want to work with them once they identify a business. But it's not the equivalent, I would say, as a Wells Fargo or Bank of America pre-approval.
Yeah. And so I think what you're saying too is that the pre-approval happens more on like the business side than the individual. It is important to care about your personal finances. I've emphasized this before in the show, like your personal credit, while personal, is in fact an extension to your business lendability because that's all they have to sometimes go off of. Is it true? So I remember a brand I was looking at a long time ago, and what it promoted was like, this business has been pre-approved for an SBA loan. So on the business side, can they get pre-approved to essentially sell their business?
Yeah. So we actually do this at Baton because a business can get pre-approved, and because essentially what the lender is looking at is last few years of cash. They're essentially looking at the durability, if you will, of the revenue going forward. So they can do a pre-approval. It is, contingent on a buyer coming in, but it tends to be more conservative than if it's a fast-growing business. You don't necessarily get credit for all that growth because a lender is going to look at kind of what maybe that was a good year and it's going to go back to how it was 2 years ago or 3 years ago, but you can get it pre-approved. And we, in our valuation, actually kind of do a first pass on how much do we think this business could get approved for an SBA loan, and then for the ones that we represent and list to sale, we actually go through the effort of getting them pre-approved. So we work with a strategic lender and kind of send them all the information so that it's ready to go. Again, to try to speed up the process so that we've done as much pre-work as possible.
Awesome. Okay. And you mentioned some other ways to purchase a business in there. You mentioned SBA, investors. There was a third one. I can't remember.
Yeah.
But let's start with the SBA. It sounds like this might be the most common path for an existing business.
Yeah, I think, and back to your personal credit, right? There's a personal guarantee on an SBA 7A loan, but the terms, again, like an FHA loan for a mortgage, it's a federal program because the federal government wants to incentivize small business creation and growth. And so, relatively really good interest rates, a long-term 10 years, so you can be very clear on how much the debt payment will be, and you're, back to your point earlier, using the cash flow from the business to help pay for the financing. And so most people will generally go to an SBA loan provided the business is able to be funded by the SBA and everything else works, because it's, I would say, the best option, all else being equal.
Okay.
And so whether it's 70, 80% of the purchase price, you can get up to 95% in some cases. So it just depends. But a lot of people, I would say like 80% on an SBA loan, 10% on a down payment, and 10% that's seller financing, which has a dual interest where the seller stays involved in the business, but also which is good on both sides, right? The seller is invested in making sure the transition is good and is also getting a little bit of upside if you can continue to grow the business.
Okay. And so some other options you mentioned, I remembered them. Let's go to investors. So,
Yeah.
we always think of investors in the venture world, but there's like this whole rising, this entrepreneur through acquisition or search funds or just random people you meet that are willing to invest in it. So can you tell us a little bit more about financing the purchase of a small business through investors?
Yeah. So similarly, right, let's call it, it's $1 million business or it's a $5 million business. You can go get an SBA loan and do that. As they get more expensive, the SBA will cap out at a certain level. And so what some people will do is they'll line up a bunch of investors. So again, a bunch of friends that are doctors or lawyers and are looking for a different investment vehicle versus the stock market. You basically agree that they will be, let's say, 5 of them that are going to give you $1 million and a bunch of different outcomes that you can pay interest on it, a la an SBA loan. Could be similar to venture, kind of upside on top once the business is throwing off cash and they're getting an annuity. But essentially you're lining up those investors as a alternative to the SBA, which is the federal government giving you a loan. In this case, it's investors giving you a loan. And there's pros and cons to each, right? The federal government, it's like, kind of pulling teeth sometimes and a lot of paperwork, but it's, more structured and more well-known. Investors, sometimes the terms can, be a bit different based on what those investors want to do. But as you pointed out with entrepreneurship through acquisition, I think more and more people are in the space and there's more and more standardization there. But those are generally, I would say, used for the larger businesses. If you're buying a bakery, as you were mentioning earlier, and it's a, $400,000 bakery, most investors aren't going to be interested in that. That's generally a good use for an SBA loan or some of these like Rob's 401k or rollovers, where you're taking money from one investment and moving it into another because it's at a smaller scale.
Yeah, and I've heard entrepreneur through acquisition investors or search funds, sometimes referred to as mini private equity. So for people that are listening right now, those are going to be like businesses, call them like even $7 million and up, but probably less than 30 million. Somewhere in there is going to be a good fit for that. And you would take on investors because you essentially can't get just a loan for that much. The one that's most interesting that I know so little about, but is super fascinating to me, is your 401k. Like, when people have said this in the past, I literally thought they were like taking the hit and cashing in their 401k. And I'm like, oh my God, what are you doing? But that is not the case. This is me being not informed. So tell us about this 401k option.
Yeah, and it's essentially a rollover option. So as many people know, you have a 401k at a company, you leave, you can either move it into, an IRA at, your NH Schwab or wherever you bank, etc., or invest. But one option is this is now known as Rob's rollover business. And there's another one in startup land, which is kind of this QSBS thing. So if there's qualified small business stock and you get the proceeds from that, you kind of have this clock where in 6 months you can roll it over to a small business that you acquire, and you get to carry over the timing because there's this sort of 5-year clock. And so the 401k is, at a high level, very similar, but essentially if you're going to use that investment into a small business, it's a way to put it there versus putting it into your IRA, which would be the other option. You can keep it in, instead of being a 401k that gets contributed to at your old company, it has to go somewhere. It could sit in that, again, a Schwab account if Schwab's administering your company's 401k, but you have the ability to shift that over into a small business. And so it's an interesting option for some folks where they want to do that.
Awesome. And so just to clarify too, that is like without penalty. So people doing this, they aren't getting hit or anything. It's just something to explore.
Yeah, it's like a tax loophole that allows you to, disperse it. It's one of the unique places you can put it other than an IRA, where you're not taking that early withdrawal penalty and some of that. And there's obviously a few others, but I am not a tax person, so I'm not going to explain this.
Okay. And so, say I'm an aspiring small business owner. I am probably looking for a business on the side of my day job.
Mm-hmm.
And this is actually, my understanding, the most overwhelming, time-consuming part is finding a business to buy. So where do people find businesses for sale?
Yeah, and I think it goes back to my earlier answer, right? Like figuring out what you want to buy and what's interesting. In some ways, that's time consuming because you're probably researching a bunch of different industries and verticals and, what seems interesting, what throws off cash that you're interested in, what are the multiples, etc. Once you get to that point, then actually I think you can search on sites like BizBuySell, which is kind of a Craigslist. Obviously, you can come to Baton.
Awful Craigslist. Sorry, we don't have to talk about it, but it's awful, in my opinion.
Yeah, but those are, it is where things are. There are broker sites, but again, at the end of the day, if you understand what you're interested in purchasing, the sites that do a much better job, and I'm rose-colored glasses, but I think we do a good job of enabling buyers to express what they're interested in, and then we reach out to them when we find results, or they can look at our results in our deal room of active listings and decide for themselves and actually go through. And I think ultimately the other piece is not only is it an interesting business and industry, but what is something you bring to the table that's in a way a thesis, right? Like you think you can bring them into the digital age because they don't have a website, and you could lean into that. Digitization or their operations might be a little bit of a mess. They've never had an issue getting new sales, but they're like, my back office is kind of a mess, but you're amazing at that. Or vice versa, you're an amazing salesperson and like they have all the equipment and kind of the process and know-how. I think it's those kind of matches, right, where you can come in and, like I said before, be that honorable successor because you're able to take over the business and then take it from where it is, cash flow that's coming out of the business, and use that cash to invest and help it grow to the next level.
Interesting. Cool. Okay, so I find a business on one of these sites. I go through the diligence process. What happens if the existing business I'm looking at has debt, and like, how does that factor in?
Yeah, there's two main, really only types of sales that happen. It's either an asset sale or an equity sale. And the big, in terms of this question, one of the big differences is in an asset sale, the debt does not transfer. So if you're buying a business from me and I have a $100,000 line of credit, or a loan, I am responsible for paying that off before all the other assets go to you. If you bought the business from me as an equity sale, then you are taking over that debt. You also get other stuff with it. So that it's a bit of a trade-off and kind of depends on the type of business. There's some, again, tax benefits, pros and cons on the two. But essentially, if there is debt, I think depending on the unique situation, the buyer will either want to assume that debt because there's something they want to do going forward, and it's worth it to do an equity sale, or it's going to be free and clear because it's an asset sale and you're essentially buying kind of the physical and intellectual property assets of that business, but any of the debt does not move forward.
Yeah, so interesting. I think about that because as a small business owner, we carry debt. It's part of the business model of what we're in. And so a factor you have to think about in selling is that like the price to sell has to be large enough to one, pay off all of our debt plus have whatever left over, which isn't impossible. But I can see in this kind of changing interest rate environment where interest rates are starting to be really high, and I know like the debt on my businesses, the interest rates are pretty low, how someone might come in and strategically want to do equity over asset just to be able to get access to capital at a lower interest rate or maybe something like that.
No, and I think there's a good analogy right these days with real estate again, because if the same thing if someone had a 2.5% 30-year fixed mortgage on their house, a lot of people are like, hey, can I keep that, and how do we just rent back from you? So it's sort of the same thing, like exactly to your point. Right. Like, is that the option? And that's why you want the debt, because the debt is at a term that actually makes sense for the business. So then it's an equity transaction.
Yeah, so interesting. When I'm evaluating businesses as a potential small business owner, what are like the key metrics to look for? Like if there was a handful that you should know about every business you look at, what would you say those are?
Yeah, I mean, at the end of the day, it's the cash flow. It's how much cash does the business generate? And there's, I don't know if there's one key metric because businesses can be different, but like the amount of cash that they throw off. And what I like to say is the more important thing is how consistent is that cash flow and how durable is that cash flow. So consistency meaning, is it going to stay consistent over time? Is it going to stay consistent across the different parts of the business? Like maybe there's 3 business lines. Are all of those consistent? Is only one and the others kind of go up and down? Do they come from certain parts of the team or the business, right? So you just have to understand what's going to stay different or what's going to stay the same, what's going to be different. And then I think durability, it's like looking forward into the future. Once I take this business over, how durable is this? Are they locked in on contracts? Do you have to renegotiate those contracts? Is it, snow removal and lawn, like mowing lawns? It's like you could make the case that over time in certain parts of the country, snow removal becomes less and less of a thing over time. Who knows, right? And so is that a durable business? Does that have to change? Whereas lawns will probably grow. So some of those things and what's recurring and how much money is coming from the same customer base. And then I think the other piece is when you look at that cash flow, what are the opportunities to grow it by above what I call above the line stuff, so you can get more customers and grow the pie, do the digital thing, build the website, which allows you to get in front of other customers, or below the line where the margin improvement, and can you see a path where those two things could change? So X amount of cash flow turns into 1.2x the first year, 1.3x the next year. Like those are the kinds of things that you want to dig in. But if you have the financials, you should be able to see it from there.
Yeah, I really like kind of knowing the industry and what the numbers mean in that industry. I know like in services, which is a massive majority of small businesses, there's always the question of can you retain customers? Like a marketing agency, for example, it's usually right in the agreement with the clients if they can essentially use it as an out if the business sells or is transferred. So you could actually look those up and find those out. and start to understand that model better. There one number that I came across that I was surprised by to look at, especially for a new small business owner that's willing to kind of grit it out for a while, is the amount of money the owner is taking out overall. Because for a well-established business, through both salary and distributions, that number could be quite large, like way larger than you need at the beginning. And if you're willing to kind of use that difference to pay off the loan,
Yeah.
you can kind of maintain or even decrease your monthly expenses.
Yeah. And that's why we talk about it as cash flow, because those are add backs that we do in our valuation. So again, right,
Cool.
maybe we see distributions, we see an owner salary of 200K or 300K, right? At that point, they're sort of extracting a chunk. You can say, actually, I can use 50K of that for the SBA loan. I can use 150K of that for a general manager to help me in the business and get the operations right. And so I'm still taking a minimal salary, but I'm in the investment phase of really helping this business scale and grow. And so you can kind of do that math, but we try to get to an apples to apples comparison of the cash flow that comes out of the business so that you can look at one service business versus another and actually see that one's throwing off 200K in cash flow and one's throwing off 300K in cash flow. You're not having to dig in to be like, actually, it's 200K in cash flow, but the owner is actually paying,
Yeah.
it's apples to apples in our valuation and in all our sales
Oh,
numbers.
cool. That's awesome. Yeah, that's super interesting. And you bring up a good point is like with that extra money, like are you willing to do the job or do you need to hire a manager? I know for me, like I'm almost like getting too old or something. Like it's like I'm at a point in my career where I'm not like open to buying a business where I'm going to have to be the manager of it. So if that owner I'm buying from is the manager, I have to be able to afford one too.
Yeah.
Going
No, and
forward.
I think we talk to a lot of owners, right? And we're like, this is a win-win. If you can get yourself out of the day-to-day, you can actually go on vacation and you can
Yeah.
have dinner with your family, and a buyer will be more interested in this business because it is something where if they want to be day to day in the business, they certainly can, but they don't have to. So it gives them optionality. And kind of to your point, like there is a GM that you would ensure that you retain in the sale, so that because they're a key employee, all that kind of stuff. So that's generally a win-win, which is also like the better your financials are, the better it is for a buyer, but honestly, the better it is to manage your business on a day-to-day basis. Those kind of things. A lot of it just is win-win, which is great.
Yeah. Cool. How long does it normally take to go through this process from the time someone, not that they start thinking about buying a business, but they like start taking action? What are we looking at here?
Yeah, it's great. I mean, it's probably the $1 million question of, do you need a year? Do you need 6 months? I think generally people say, 6 months, maybe it's 6 to 9 months. I do think one thing that we're trying to do a lot of at Baton is shrink that process down and also have a chunk of that process be hopefully while you're still in your existing job, because we're helping you identify businesses, we're helping you do some of the curation early, and it's really only once you get close to the bottom of the process and the end of the process that you are thinking about, okay, now I'm going to leave, now I'm going to look at stuff, because a lot of the time it's probably a chunk of time to figure out what kind of business. There's a bit of a lot of waiting because you have to find the right business. It only takes one, but again, right? I think home sales are another good analogy right now, because there's not a lot of homes for sale because people are sitting on amazing mortgages and whatever. And so, how long will it take you to move from someplace to another place and find that home? It's a bit of an open question, but whenever we kind of think about it, that once you've identified a business, you can actually move very quickly and have an offer on that business within weeks. And then it's generally a month or two to close once you have an accepted offer. And the largest variable is on that search phase.
Yeah.
So.
Interesting. And you brought up such a good point on, I'll keep like pushing into this one, buying a business versus starting one is, if you're buying a business, you can do this on the side while keeping your day job. You're not like, quitting your job to see what you might do and have that pressure. You could be like quitting your job like right before you go into managing the business, which
Yeah.
really de-risks the process, and for a lot of us takes away a tremendous amount of stress that
Yeah.
nobody really likes carrying.
Yeah.
Well, okay, so to wrap up, I would love, we've talked about Baton a little bit throughout the show and in different questions, but just for our listeners, I would love to hear, like, what does Baton do to help aspiring business owners? What does that process look like specifically on the buying side? So someone looking to buy a business.
Yeah, I think I use analogies a lot, but I think, we talked about Craigslist before. It has a lot of inventory, but there's not a lot of trust and transparency there. Is the data right? Are these real bicycles that are for sale, or, a room for rent, or whatever it is? And I think we want to be that, trusted, transparent source where a buyer can come in, know that every listing that's on Baton has been vetted, whether it's an active listing, whether it's been sold, etc. And we really think of ourselves as the one place that you can get verified and trusted data. And so as a buyer, that's super important, because any buyer that's listening to this, if they've been on a biz buy sell, they're constantly reaching out. They may or may not get hurt, may not hear back. They may or may not, get an NDA. Then they see the data and it doesn't match up what they thought. Like for us, people go all the way through. They can see the actual name of the business on our site, click through to the data room, do the evaluation, and then schedule call to like move down the process. We had one of the businesses on our platform get listed on a Tuesday. We had an accepted LOI from a bunch of buyers, I think, a bunch of buyers by end of day Friday. And now we're kind of in the diligence process and closing, right? And so there's this ability to really bring serious buyers with serious sellers and cut out kind of a lot of the wasted effort that happens in the current ecosystem today.
Awesome. So needed. And thank you so much for being here today. We've learned so much. For all of you listening, thank you for listening to the Funded Podcast. We hope you found this episode informative and helpful on your business journey. And don't forget to subscribe to our podcast and follow us on social for more great content. If you're looking for funding to grow your business, buy a business, that's what we do on our site at getfunded.com. And otherwise, we will hear from you all next time.